SoFi. You've probably seen the name somewhere, maybe on a stadium, in your app store, or definitely all over your social media feeds. And you've probably noticed it's a company that splits the room like almost no other. I mean, for some people, it's the absolute future of banking. For others, it's this dangerously overhyped stock that's just waiting to crash. So, what's the real story here? Let's get into it.
Okay, so it all kicks off with this really simple question on Reddit. Are you happy with SoFi? The person who posted it had just switched their direct deposit after getting totally fed up with another digital bank, Chime. And this one little question, it kind of peels back the curtain on these two completely different worlds of SoFi, what it's like to be a customer, and the high-stakes, knockdown, drag-out fight happening between its investors. So first things first, let's start where it really matters most, with the people who are actually using this app every single day. What do they love about it? And more importantly, what drives them absolutely crazy? Well, you start to see this really clear pattern emerge. A lot of SoFi users are kind of like refugees from other fintech apps. They talk about ditching Chime because, a deposit didn't arrive on schedule. Or as one person put it, and I love this, I did not like having my money played with. So they come over to SoFi looking for something that just works. One user called it the simplicity of Chime, but better. And they love features like the saving vaults and autopilot options for handling their money. And when you really dig into what people are raving about, a few things just pop up again and again. Getting your paycheck up to 2 days early? That's a huge draw. People consistently say the app is smooth and just super easy to use. And that vaults feature that lets you split up your savings for different goals? People love that. For a lot of them, the big appeal is just having everything, banking, investing, loans, all in one place. It's like a financial command center right on their phone. But yeah, it is not all sunshine and roses. For every person who loves it, there's someone else who's been totally frustrated. The investing platform gets a lot of heat, especially if you're an active trader. One user just called it a nightmare because of glitches that would show these insane price swings. Customer support is constantly described as hit or miss, and some people have had just awful experiences with fraud disputes, waiting months for a solution. Oh, and if you actually need to deposit physical cash, good luck. It's a pain and it's going to cost you. Honestly, this one comment from a user just nails it. It perfectly sums up the whole customer experience. They say, SoFi is the best bank I've ever used. That being said, make sure you have a brick-and-mortar bank account linked to it. And that right there captures the duality. It's a fantastic digital bank, maybe the best out there for some things, but it's got these real-world limits that mean you probably don't want to cut ties with your old-school bank just yet. Okay, so that's the customer side of things. Now, let's switch gears and talk about the bigger and, frankly, much louder conversation that's happening on Wall Street and in investing forums. Why are people so passionate about this company's stock? Let's start with the bull case. The argument for SoFi starts right here, with this number. While a lot of other banks were in turmoil, SoFi's deposits just exploded. They jumped by almost $3 billion in a single quarter, hitting over $10 billion. That shows a massive amount of trust from customers, and that kind of explosive growth is exactly what gets investors excited. So how are they pulling this off? Well, their whole strategy is built around something they call the financial services productivity loop, which is really just a fancy corporate name for a growth flywheel. The idea is simple. They get you in the door with one product, like maybe a great savings account. Then, once you're in, they start trying to sell you everything else: investing, a credit card, a personal loan. The more stuff you use, the stickier you are as a customer, and the cheaper it is for them to keep growing. And look, the strategy? It really seems to be working. The numbers don't lie. Their total net revenue is up 33% year over year. They pulled in 800,000 new members in just one quarter. And their fee revenue is up a massive 67%. If you're betting on SoFi, these are the numbers you're pointing to. And all this optimism leads to some incredibly bold takes. I mean, get a load of this comment from a Reddit user. SoFi will be a $200 stock within 5 years. I don't care what anyone says. Now that, right there, captures the sky-high, almost religious conviction that a lot of SoFi's biggest fans have about its future. Okay, but you know how this goes. For every bull, there's always a bear. And the skeptics, the bears, they have some very serious, very pointed questions about whether all this hype actually matches reality. This question, which comes straight from a value investing forum, gets right to the absolute heart of the bear case. Yeah, the growth looks amazing on paper, but are investors paying way too much for it? Is this whole thing just a classic value trap waiting to spring on unsuspecting buyers? And the centerpiece of the entire skeptical argument is this number, 40. That's SoFi's price-to-earnings ratio. And to put it mildly, that is a wild number. As one user said, a 40x PE for a bank seems nuts. For the skeptics, this valuation is the single biggest red flag waving in their face. So let's just quickly break down what that even means. A PE ratio is basically what investors are willing to pay today for every dollar the company makes in profit. Now, a high PE is totally normal for a fast-growing tech company where everyone expects huge future earnings. But for a bank, most traditional banks trade at a tiny, tiny fraction of that. So investors are essentially making a huge bet that SoFi's tech will make it so much more profitable than a normal bank that it justifies that crazy premium. So what's got them so worried? Well, the arguments are pretty clear. First, SoFi is competing against absolute giants. We're talking JP Morgan, Bank of America, who have practically unlimited money to build their own apps. The bears also argue that SoFi's products, savings, loans, credit cards, they're not actually all that unique or innovative. And the biggest criticism? That it's really just a bank pretending to be a tech innovator to get that sweet, sweet tech company valuation. In this comment from a Reddit user is just brutally honest. It cuts right to the chase. They offer the same service as the big guys, but do it on a badly colored UI. And that's really the core of the whole skeptical argument. If you strip away all the slick marketing, is there actually anything special here that justifies that massive price tag? So this entire fiery, passionate debate, it really all boils down to one fundamental question of identity. What is SoFi? And you can see this tug of war playing out right here. I mean, is it a bank? Well, its main business is lending money and taking deposits, like a bank. The catch, though, is that it's growing at a speed no traditional bank could even dream of. So, okay, is it a tech company? The bulls scream yes. They point to its data-driven flywheel and all the tech it owns. But the catch there is that its valuation is just astronomically high for a company that, at the end of the day, makes its money from lending. And this brings us to the final, and I think most essential, question, pulled right from those investor forums. What is their moat? What is their unique long-term competitive advantage, besides just being the first to do this all on a slick app? Answering that one question, that's the key to deciding if SoFi is really the future of finance or if it's just a product of today's hype.